Hi, folks. Welcome to the special episode. Do read the full disclaimer, understand it, and then move forward in the video. We're going to talk about your queries today. So, Ask Weekend Investing is a series where we take up the queries that we receive and we try our best to answer them to the best of our abilities. We've done 67 rounds of such questions and answers before. 970 queries have been answered. All those rounds have been documented and they're available in the links in the description. And you can go through each one of them if you like at your leisure. And of course, please do subscribe to our channel. If you're a regular viewer, it will give us great motivation to see that you have subscribed to our channel. Let's start with the Q&A. Kriti says, as I can see, MMTC PAM gold coins come with higher prices compared to equivalent gold spot rate due to factors such as making charges, premium, etc. Is it fair to assume that when selling the gold coin at that time also we will realize the prevailing selling price, which would of course be higher? So it's very, very simple. There is a gold spot rate. Then there is something called a making charge. Then there is, the manufacturer will take some premium, or the wholesaler or distributor will take some premium. Some logistics cost may be there, and that is the price of that coin. When you're selling, the buyer will basically give you the spot gold rate minus maybe even 0.5% from that. It's just like when you're saying you're buying a 2000 ton car, the scrap value of that is 5 lakhs, but the car comes to you at 7 lakhs or 8 lakhs, whatever it may be. So there is a loss of um, paid value, so as to say, in the very short term. But I think this it's good that you've raised this question, because over the long term, and I believe that most people don't buy gold for like 6 months, 1 year, 2 year, 3 year. They are buying for the long term. Let's say an average hold is 10, 15 years, right? Now you've paid assumingly 3% of GST. I'm also comparing this with non-MMTC physical gold to, let's say, ETFs or mutual fund gold, etc. also. So all formats of gold. If you hold an ETF for 15 years, you're paying almost perhaps 0.7 to 0.8% to even 1% in some cases per year to the gold ETF company. If you are having a mutual fund, you're perhaps paying somewhere similar. I'm not even including the discrepancy of the performance which can also arise. So over a 10-15 year period, it is a almost a given that you are paying 10% uh, of your value to the organizer of this product. Whereas when you are buying physical gold, yes, you pay 3% GST, and perhaps maybe 2 to 3% of other charges, etc., etc. So you may pay 6%. But then is that 6% upfront paid better than 10 or 12% paid over a longer period is to be seen. And of course, in the whole idea of gold is that there should not be a counterparty risk. Why do central banks want to hold gold and hold it near them and not give it to others? Because whoever holds the gold owns the gold. Tomorrow, God forbid, if some asset management company goes rogue and says we are sorry, we did not buy the gold that we promised that you should have. Who gets you? Who will get you the gold back? I'm not trying to, scare anybody, but this is the reality. This has happened many times in the past, that somebody has promised you something and it is not there. It's a promise. Whereas when you're buying physical gold, yes, there are issues of storing it. There can be issues of theft. All those things are there. But then there is no perfect world. I mean, you have to see what works for you, right? I mean, some people will invest in land. Others may say that no, somebody will come and sit on that land, so I don't want to buy land. It all depends upon who you are, what is your purpose, what is your outlook, and do you really understand gold? Those who really understand gold will buy physical gold. Let's move on. Sandeep says, I would like to invest in Smallcase through HUF or LLP account. Can this be possible in the future? If not, then what is the way around this? So unfortunately, the platform decides what kind of accounts they will allow. We will certainly raise this request again to Smallcase, if they can allow HUF or LLP accounts. As of now, right now, HUF is certainly not allowed. LLP, I'm not very sure of, but people have misused some of these avenues, and hence, there is some perhaps the platform is not very comfortable with that. But what is also possible then in that case is that maybe some PMS or AIF route you can choose if the level of investment is of that nature. But otherwise, I mean, you can always also use some fund who are open to HUF or LLP. But yes, small case is not yet open to this. Sanjay says, how do you review FII short position in future and its impact on index levels? It is very well known that money flow is perhaps the only reason the price momentum. Can fund flows be used as a leading indicator? So all these data points are available to everybody in the market, and it is not hidden, but it is very difficult to decipher these data points. So when you see that an FI has a short position, is it a naked short position, or is that short position being taken contra to what they are holding in the cash market? So if somebody creates an index by buying the stocks in the cash market and creates a hedge by doing a short in the futures, then it's a hedged position. You will not really say it's a short position. But then that correlation is not open to everybody. You can't really make out what is happening. Or it may be, a more sort of some synthetic position that they would have made, that short here but long, let's say in Gift City. So it's very, very difficult to decipher. I'm sure there are people who track this on a more deeper manner and are able to come out with insights on this. But for a large practical purpose, I think trying to play the market by trying to predict basis the positions in the market. Like for instance, very, very recently, just 2 days back, Michael Burry, the big short guy, has announced that he's closing his public fund and he'll only use his personal money to short the market. So, uh, you know, rocket scientists like him use different kinds of methodologies to determine whether they should go short or not. But the market overwhelms everybody. So my approach has been very, very different. I don't want to predict the market, and I don't want to make any prediction basis the numbers that I'm seeing, because those numbers are publicly available. There is nothing special that the number is offering me which it is not offering to others. So if you think that you are the only shark in the market, that is the biggest foolishness one can think of, because what you know, thousands of others also know. So it is probably better to swim with the sharks than to swim against them. Harish says, dear Mr. Alok, thank you again for all the exceptional content and teaching you provide. I'm truly grateful for your service and clarity you bring to complex financial topics. Thank you, sir. In the current economic circumstance, what allocation split would you recommend between gold and silver? For instance, the one has decided on a total allocation of X amount to precious metals. What percentage of X typically should go to gold versus silver? I think for me that number X is 100 and silver is 0, because I feel that silver is a very speculative element. Of course, silver usage, industrial usage is going through the roof, because solar panels use a lot of silver. They don't use gold. And solar panel production till 2030 in China, for instance, is going to be, I mean, China is going to produce more solar energy than the entire US energy system by 2030. So silver has a very real use for which it could go up, and it is going up. Gold is more related to the monetary side of the system, where central banks are accumulating it, and gold is seen as the neutral global asset. So the purpose of both these uh, elements are very different. We should not try to combine them. I don't like silver also because it is very volatile. I mean, in the last 20, 30 years, gold has had a maximum drawdown of 25%, silver has had a maximum drawdown of perhaps 50 or 60%. So again, depends upon, if you are doing short term trading, perhaps silver is a better bet. But for long term investing, I feel gold has a more you know easier path for investors. Second question is, how might this gold to silver allocation ratio typically change over time, and what key economic? So I don't believe in all this ratio business, that gold silver used to be this ratio and hence it has to come back to this ratio. Gold to crude oil used to be this ratio, it has to come back to this ratio. There is no have to kind of business that is happening, because over a period of time the usage, the importance, the abundance for both are very different. If gold is mined 3000 tons in a year, silver is mined 3000 tons within probably some few weeks. So there is some concept of a stock to flow ratio, which will determine how rare a commodity will remain to be, which gold is and silver is not actually. So there are a lot of complexities to this. So I think silver is a metal which will give good results, but it moves very, very swiftly in very short spurts and then gives you a very long, frustrating bear market for 10, 20 years. So, I mean, if you are game for that, then go into silver long term, but otherwise use it as a speculative trading bet whenever you find setups. I think that's a better use for silver, for me at least. Manju says, I'm currently subscribed to three investment models: HNI Wealth Builder, MI Evergreen Momentum, and All Seasons. To what extent do these models overlap in strategy or underlying assets? Could I experience over diversification? Should I get out of any? So I think the better way would be if you can just drop us a mail and we will actually do the calculation. That we have a utility at our end. And as far as I know, MI Evergreen and HNI Wealth Builder will have barely maybe 5% overlap, if at all. Uh, and All Seasons certainly will not have any overlap because it is trading ETF. So there is really no overlap as such. But do drop us a mail and we'll update you. Harshit says, is gold is an okay way to accumulate gold? Let me just stop there. Yes, it is an okay way. It's not the best way. It's an okay way. Uh, as it is reported to be backed by gold, or can ETFs also default? So I think three, four questions before I alluded to this. I certainly am not saying any ETF is going to default or any ETF is not backing it up with gold. They're all very reputed, respectable companies, whether it is Nippon or whether it is Zerodha or whether it is Axis or Kotak or whoever it may be. Uh, but big companies have failed over the last century. So there is no such thing as too big to fail or cannot fail. I mean, when you talk about risk, I mean, 99.9% is still risky, right? So can you say that Indian government sovereign guarantee cannot fail? Can anybody say that today? Most likely it will never fail, but can you say that it will never fail? No, it can fail. I mean, just 30 years back we were down on our knees, giving our loan, gold on loan, to get some money. So things can happen which you can't think of today, and hopefully nothing of this sort will happen over a period of time. So public documented audit, this, that, all that is fine. Fort Knox, which supposedly holds 8,000 plus tons of gold for the US government, US central bank, has not been audited for the last 50 years. There is a lot of speculation whether it has the gold or not. So if Fort Knox can be in that situation, what is, the AMCs that we're talking about? So the best way, of course, is always have physical gold in your own possession. That is the only way where you can say for sure that yes, you have the gold. With SGBs selling at a premium and digital gold being a sham, is there a better alternative to gold B? So the best alternative is physical gold. The next best okay way, as you say, is gold ETFs. The next okay way is gold mutual funds. The next okay way perhaps is SGB is anyways out now. So also they are selling at a premium. So that's almost out. And the next in that line would be digital gold. It's not a sham, but it is not regulated. I wouldn't call it a sham, because a sham is a sham when it is proven to be a sham. So I mean, there is some inefficiencies in that system, but um, I mean, that's not the right way, probably. I mean, there's no advantage of that as such. The only advantage there is that very small, well, you can do that in the ETF also. That very small ticket size can also be satisfied. The only advantage here is that while doing your, thing on the mobile in some app, you can just press and get 10 rupees worth of digital gold. That is the easier part because there's no regulation on that. So from that perspective, gradually accumulating gold, perhaps in these you know, formats, and then once you have some significant amount, let's say you keep adding few thousand rupees worth of gold bees or a gold ETF at different points of time, and then few years later you have, let's say, 100 grams worth of gold bees, then you can always switch, sell that and get your physical gold home. That kind of a switch you can do perhaps. Chetan says, "Hi sir, I listen to your YouTube videos and I have similar thoughts about gold, US debt, geopolitical situation, central banks accumulating gold, all leading to gold price increase." So nice to hear that, Chetan. But when you will listen to some YouTube videos, your views get aligned. That's why the influencing thing works. So maybe that is also happening there. But nevertheless, so you have these four questions. Is it right to think that US Fed is going to reduce the interest rate in future, most likely to zero, which would increase gold price further? So Mr. Trump does want to reduce interest rates. He has publicly, vocally said so, and I am hoping that there will be a 0.5% cut in December, and definitely it will increase gold price. That has been the trend. Whenever rate cuts happen, gold price goes up. Question two is, in absence of SGB, how good option is gold ETFs for investment? It is a very good option, I would say. Just like the last question, it's an okay to good option, but it's not the best option. Let's put it this way. Third question is, doesn't FD government bonds become the next best option after gold, since Nifty 50 returns are single digits and there are minimum incentive of market risk recently? So this is something where some prediction is coming into the answer, that we are assuming that Nifty 50 returns are going to be single digit, which may not be. So I would not, want to stick my neck out and say that Nifty returns are going to be single digit, because what if we enter into a phase like the 1970s of Japan, where for 20 years the market just kept on going up? So never say never in the market. You don't know what's going to happen. I also don't know what's going to happen. So have proper allocation, asset allocation to all asset classes. Give more allocation to where you have more confidence, and try not to time the market too much. I would think that is the way. The On the FD gold government bond front, while the government in the US is trying to get interest rates lower, but perhaps the market will not let them do so. That is my thought process, where if inflation gets out of hand, then the markets will force the interest rates to go up. You can't have the cake and eat it too. I mean, you have distributed so much free money, printing so much free money. How can you prevent inflation not to happen? And if inflation is going to come, how can you not have higher interest rates to control that? So it's a very, very tricky situation. I don't think, and government bonds, for instance, US Treasury bonds have given zero return for the last 10 years. And this when 40% of the entire world invests in US Treasury. 40% of all private assets, $350 trillion of private assets are there, of which approximately 40% are in US Treasuries and different kinds of US bonds, which have given zero return over the last 10 years. So you can't say what will happen next. Next one is, I also read that Buffett indicator shows Indian stock market is valued at 130, 140% of India's. How good or bad? I think Mr. Buffett can answer this. He also called gold a poor pet rock, but it's performing better than his fund right now. So I don't want to draw anything on that front. Fayaz Ali says, love your momentum strategy, small cases. Thank you very much. As an ethical investor in quantum ethical fund, I'd love a Sharia compliant version, picking momentum stocks from ethical equities for a halal portfolio. Can you create this new small case? So Fayaz, I am not very, I would say, conversant with what exactly are, the requirements of such a small case. I know on a very broad basis, I know what is Sharia compliance, but I'm not an expert on this. And for that reason, I don't want to enter into a space which I'm not fully confident of, or, have my hands on confidence on. So at some point of time, if I do able to sort of maybe partner with somebody, or, have some more knowledge about this, I'll certainly look at this. But for now, I don't have one. Thanks. PV Rao says, can agricultural land be considered as an asset class for long-term views for say another 15 years? Yes, for sure. Why not? every asset class is a viable asset class, and you will find that on a gross basis, most asset classes will give you somewhere similar returns over long periods of time. Land probably beats all other asset classes when it comes to it. It's only because people buy real estate once the rally is overdone, or it is bought in FOMO that their returns from real estate don't come. So you talk to the real estate guys, they will tell you what kind of returns they get from real estate. So real estate is that beaten donkey in our ecosystem where there is nobody to champion it and say that this is one of the better asset classes. Uh, that's unfortunate. The same happened for gold also. Because the financial market experts continue to beat everything else down so that they can sell their own product. But almost all asset classes, major asset classes, will give you very good returns provided you have knowledge about it. Same thing goes in the stock market also. If you don't have knowledge about the markets, and if you are investing in dead stocks or overpriced stocks, or stocks that have already run up, you will not make returns there also. So comparing some lemons that somebody may have bought in real estate and saying that, oh, they got only 6% return, market gave me 25% return, I think that is just wishful thinking. There are experts sitting in every sector, in every asset class, and who will do very well in that asset class. I mean, I personally know many people who never invest outside land at all. 100% they invest in land, and they are multi-millionaires, and they've done very well with land. Second question is there a possibility that governments confiscate gold like in US in 1930s under the garb of national emergency? They can confiscate anything. They can confiscate land also. They can confiscate your money in the bank also. They can come and say you have capital gains that you have not realized, but we want tax on that. That was a debate that started very recently in the US. So unrealized gains should be taxed. Or they may say tomorrow, like we had in the 1970s, that you will have to pay 90% income tax. Government can do anything it likes. We are slaves to the government because we live in a system like that. So to answer your question, yes, it is a possibility, but it's not just gold. They can confiscate anything. Naveen says, what is the way of investing in your small cases? What is the minimum amount to invest? So the way is to go to Smallcase website. You can go to weekendinvesting.smallcase.com, and you can find all the small cases there. And most small cases will have a minimum of 2 lakhs. Some have even 5 lakhs. The amount that is recommended is also mentioned there in the description. So you can go through all of them. You can drop us a mail and we'll help you out as well. So we are at the end of today's Ask Weekend Investing round, Q&A round. All previous episodes are here. If you want to spend your weekend in binge watching this instead of Netflix, and certainly the some of the questions answered would increase your knowledge by a wide amount, like it does for me when I answer these questions. Sometimes I do come across questions which I have to think about, and it increases my thought process and improves my thought process also. So thank you so much for watching, and if you like these videos, if you like our content, do subscribe to our channel and do share this with your friends and family. Thanks. Bye.